Okay, so this is for the 2022 company account. It was a pre-paper, all right, and it was for Aiken Limited. All right, so we'll just do the company account one first. As you can see there, you've got your trial balance. I'm not going to mark it out. I'm just going to highlight the stars in advance. So your stars are going to be your opening stock, your debenture interest paid, your bad debt provision, and your... That's basically all your stars. So again, the stars refer to anything that doesn't follow the T account rule, okay? So those items, they won't, you just need to know where they go in advance, all right? So there's going to be a working on my debenture interest. Opening stock goes to the profit and loss trading account, and the bad debt provision goes minus CA in the balance sheet, all right? So just make sure you're happy that you know where all those pieces of information go before we start the question. So the first working we're going to have here is going to be the stock working, very, very straightforward. Nothing overly difficult here. So stock which had cost 93,400 was now worth closing stock was 93,400. This figure includes damaged stock which cost 9 and now has a net realizable value of 70% of the cost. Okay, so working one, it's very straightforward. Working nothing new is going to be closing stock. All right, my figure coming from the question itself here was 93,400 euros. So on the 31st of the 12th, it was 93,400 euros. And that includes damaged stock, which cost 9,000. So I simply take off the 9,000 euros. And I'm going to add it back at what it is worth at the present minute, which is 70% of cost. So 9,000 multiplied by 70%. And that gives me a figure to the value of 6,300. So that's its net realizable value. That's what I'm going to add it back at. Sorry, 6,300. Throw into the calculator and I come out with 90,700 euros. Okay, where does that go? It simply goes to the profit and loss account, it goes to the trading account, and it goes to the balance sheet as a current asset. Okay, so 90,700, 90,700. First working done and dusted, ideal. And we can move on to the second working. The second working in this case is going to be patents. Ideally now with these newer style questions, you want to just keep an eye on what year we're doing the account for. So we're doing the account for 2021, okay? But the actual question itself is based off of the patents been written off last year for 2020. So it's been written off over a 6-year period, but it started last year. So when I'm doing that, I'm simply going to divide it by 5 because that will allow me to come to the correct answer. So the first thing I'm going to do is, before I do my patents, my working two, is I'm always going to do my investment income first, all right? Investment income. The investment income, very, very straightforward. Simply going to go to the trial balance, okay? And I'm looking for investments. So 3% investments, 90,000. And look at the date. I acquired the investments on the 1st to the 6th, which means I had them for June, July, August, September, October, November, December. So that's 7 months. Don't make the mistakes of thinking it's 6 months. That's actually 7 months. So what I'm going to do there is very straightforward. I'm going to take my trial balance figure of 90,000 euros. I'm going to multiply it by 3%. And that gives me 2,700 euros. I'm going to divide it by 12 and I'm going to multiply it by 7. Again, that's because of the date. The date is the 1st of the 6th, which means I had it for 7 months. And that gives me 1,575. That's the figure that needs to go to 2 places. Very straightforward. It's going to go to my gain and it's going to go to my current asset, okay? You'll see me call them receivable and due, okay, normally. Either way, 1,575 goes to both items, if that kind of makes sense. All right, in a T account, how that would look would be my 1,575 is my gain, all right, and my asset in this case is 1,575 also. That's my current asset. Very straightforward, nothing overly new there. Once I have that calculation done out, then I can do my patents working. Now the patents working said that patents which incorporates 4 months of investment income is to be written off over a 5-year period, okay? So what I want to do is I want to take the 1,575, so 1,575, I'm going to divide that by 7 and I'm going to multiply it by 4 because that includes the 4 months. That gives me 900 euros. That 900 euros is going into my patents. So what I'm going to do is I'm going to take that off my asset and that leaves me a total of 675 euros. So in a T account, the 900 will come out and the double entry is it goes into my patents, okay? And again, the patents trial balance figure coming from the trial balance itself is 44 44100. Don't need to go through that, but all you do need to know is in a T account, this is my intangible fixed asset of patents as it is at the minute, and all I'm doing is adding on the 900 euros. So I've got 44100 and I add on 900 euros because that's the double entry. That gives me 45,000 euros, and that's the figure then that I can divide. All right, so as I stated already, it's to be written off over a 6-year period, but because it started in 2020, it means there's already been 1 year written off, which means I'm actually going to divide it by 5. So if I divide that by 5, I get 9,000 euros. Okay, so the 9,000 euros has been written off. So I simply take it away from my intangible asset because I no longer have that asset anymore, and that leaves us with 36,000 euros. Okay, the biggest mistake that I've seen with you guys is you'll forget to take off the 9,000 euros. So you'll forget that there's a double entry. The double entry is I'm taking off my asset, which means it has to go down on the debit side of another account. What does it have to be? If it's not an asset, it has to be an expense. Okay, so that amount there is my patent written off, and that's going to be my administration expense. Okay, 9000. My 36,000 is going to be my ITFA. All right. Up here, I've got my gain of 1575. That amount won't change, 1575. And what does change is the actual asset. So the asset is valued at 675 euros a minute, so 675. And that's working 2 done. Okay. And we can move on to working 3. The figure for advertising is for an 18-month campaign which began on the 1st of the 11th, 2021. Just keep an eye on the date of the account. So we're doing the accounts for 2021. How many years refers to 2021? 2. Why? Because we've got the 11th and the 12th. Okay. Which means if it's for an 18-month campaign, 2 months relates to this year. How many months does not relate to this year? You're going to have 16. So that 16 is the figures I'm going to look for there. Okay. So working 3. Advertising. Figure for advertising. Again, go to the trial balance and get my figure for advertising. And my figure from advertising coming from the trial balance is 5,400 euros. Okay, so this is how I will get you to do it. 5,400 in a T account. That's simply my advertising expense. I got 5,400. Okay. Now, always remember that 5,400, lads, is split, 5,400. It's for an 18-month campaign, so I want to find out what relates to this year and what relates to next year. Okay? Now, I'm going to put a star beside next year's figure because that's the figure that has a double entry in the accounts. Next year refers to 16 months out of the 18. Okay, which means this year's is 2 months. And if you're wondering why it's 16 and 2, it's because it's for an 18-month campaign and it started on the 1st to the 11th. So how many months refer to this year? 2 months, November and December. Everything else refers to next year, and I've already paid it in advance. So the figure that I really care about is the 16 months, because that is not an expense, because I've paid it, but it does not relate to this year. So 5,400 divided by 18 multiplied by 16, that'll give me the magic number in this case, which is going to be 4,800 euros. So that 4,800 euros, because it does not relate to this year, I'm going to take that off my advertising expense, okay? And what you'll notice is that will leave me with my 2 months figure, which in this case is going to be 600 euros. All right, and that's just simply your 5,400 divided by 18 multiplied by 2. That's the other way that you can get your 600 euros. As I said, the easiest way to do it is the 16 months, because that's not an expense and I take it away. So the double entry is, if 4,800 comes out of this account, it goes in on the debit side of this account. Well, it can't be an expense because this is already an expense, so it has to be an asset, and it's a prepaid asset, 4,800 euros. Okay, so CA, 4,800 euros, and I've got S&D, and that amount's going to be for 600 euros. And that's, we have covered that a couple of times, but that's basically how you cover that working. That's working 3 done. And we're going to have a look at working 4. Right, goods with a retail value of 10,000 euros were returned to supplier. The selling price was cost plus 25%. The supplier issued a credit note. Again, just make note here that the only thing that I care about, no entry has been made in respect of the restocking charge. So because I returned the goods to supplier, he's charged me 10% of the cost. That's the important thing to note. So it's going to cost me 10% of my purchases, and I owe the creditor 10%. So that's the only transaction that's occurring here. So the first thing I need to do is before I open up my accounts, I'm going to open up working 4. what I'm going to do is I'm going to take the figure. So goods with a retail selling price of 10,000. So 10,000 is the value that I'm going to sell them. So that's not referring to cost, that's referring to selling price. I need to find the cost. And it's cost plus 25%. So you can see there cost plus 25%. So I'm going to divide that by 125. I'm going to multiply it by 100. And that will give me the cost price. The cost price in this case is going to give me 8,000 euros. Okay, so that's the value of the goods that I bought from the supplier. Okay, 10% of that is going to be a handy 800 euros. That 800 euros, lads, is the figure that needs a double entry. That's the money that I owe for purchasing the goods, and that's the money I owe to the creditor. So that's the double entry. One transaction, two entries, fairly straightforward. So the two accounts I need to open are purchases. Again, just doing a T account, and creditors. Keep it nice and small, nice and tight. All right. Right, I'm just going to take these figures from the trial balance because it's very, very straightforward. All right, there hasn't been any working on creditors or purchases yet. So the trial balance figure for purchases come from your trial balances. No, I don't need to show it to you. Okay, 940000. That's my expense. 940000. All right, and I'm simply going to add on the 800 euros because that amount is costing me money to return the goods, and that gives me 940800. And the double entry is after I get my trial balance figure for creditors, which is 57,000 euros. On the credit side, 57,000. I'm simply going to add on the 800 euros because I owe that money to the creditor. Again, very, very straightforward, nothing overly difficult in relation to that, 57800. And that gives me my two figures. So I've got a new P&L trading account amount for 940800. You can be guaranteed that's going to change. And I've got a new current liability to the value of 57,800 euros. All right, very straightforward, and that was working 4, and we can move on to working 5. Okay, right, working 5. Provision for depreciation, nice, handy working. Again, have a look, because they're giving me the rate of percent, that indicates to me that, let's have a look at it there now. So 15% of cost is the company's policy to charge depreciation the year of acquisition under your disposal. So because they're giving me the percentage here, right? There's nothing got to do with scrap value, but if you look at the dates there, they're giving me specific. They're not giving me the exact number of dates or the kind of exact dates that I need to be able to do this, okay? So it's going to stray a small bit, and this is why they have this depreciation. So it's a full year's depreciation charge in the year of acquisition and none in the year of disposal. So what that basically means is that I sold an old vehicle and I bought a new vehicle. So the new vehicle, during the year, the delivery damage cost 30,000 was traded in against the new vehicle costing 42. So I bought a new vehicle of 42,000 euros, and I bought that in the year 2018, was it? No, it was sorry, no. So the 30,000 refers to the old vehicle. Sorry, yeah, so it's 30,000. So it's 30,000, and I bought that vehicle in 2018. All right, and it says during the year here. So we know that my year in this case is 2021. So 2018, 2019, 2020. And 2021. So the depreciation policy is going to be full year in the year of acquisition and none in the year of disposal. And as you can see there, that's going to be my 3 years. Now, I'll get to that in a second, but we'll bring it back to basics for the time being. Because I bought an old vehicle, sold an old vehicle and bought a new vehicle, my first work is going to be delivery, then cost. Very straightforward, nothing overly difficult in relation to that. The trial balance figure coming from the trial balance is 120,000 euros. Okay. I bought a new vehicle, which had cost 42, and I sold an old one for 30. Okay, so I sold the old one for 30, and I bought a new one for 42. Throw it into the calculator, and I come up with 132,000 euros. Very straightforward. In a T account, my 120 is on the debit side because it's an asset. I add to my asset of 42,000, and I take from my asset of 30,000. And that's my fixed asset. So my fixed asset in the balance sheet is as follows: 132,000. Is that okay? I don't know why I'm asking you that because there's no one here to answer me. But anyway, right, that's the delivery van cost. Now we're going to do the depreciation expense. Again, what you're normally used to seeing is old, new and existing. But because they don't give us the exact date of purchase or date of sale here, we cannot do it that way. Okay, So we're going to do it like we would have done previously in relation to the sale of scrap material, all right? So we're going to bring down my figure, which is 132,000 euros, all right? So from the 2019 and the 2022 company accounts, you normally multiply it by 5% and take it away, because that's the scrap value, okay? Or 4 or 5%, what it was different in the two questions. But in this question, there is no scrap value, which is fine. So I literally just get 15% of that, okay? Because that's the rate of depreciation. If you're wondering where I got the rate of depreciation, you can see it there, 15%. I've got a big circle around it there, okay? Anyway, I get 15% of that and I come up with a figure to the value of 19,800 euros. That's my depreciation expense. It goes to the selling and distribution expenses in my profit and loss account, 19,800. In the T account, that will go on the debit side, 19800, and that's my expense. All right, the double entry is that has to go to my accumulated. And again, you're very familiar with this layout. So I'm always going to have a trial balance figure. If you're wondering where the trial balance figure comes from, go up here and have a look. Delivery vans, cost of 120. Okay, so that refers to the cost. That refers to the net book value, which means the difference between the two has to be my depreciation. Okay, very, very straightforward, not very difficult in relation to that. So the difference there between the two is going to be 25,000. So that's my opening accumulated depreciation, 25000. So trial balance, 25000. What's going into it is going to be, I'm going to add on the 19,800 because that's the double entry, like so. Okay, 19,800 plus 19,800. And I'm going to take away, so that's my this year's charge. And I'm going to take away my old depreciation and the vehicle that I don't have, because I sold a vehicle up here, which means I no longer have it. So how I would do that would be as follows. Again, this is where the number of years that I have calculated here comes into play. So the old vehicle cost me 30,000 euros. So it cost me 30,000. If you're wondering where I got the 30, I look up to my delivery van cost and I sold them for 30. The rate of depreciation is 15%. And I get 50% of that, comes out as 4,500 euros. Okay, so that's 4,500 euros annually. Okay, so just be careful in relation to that. So that's for 1 year. Now, how many years am I depreciating it by? And I did this at the start. So I bought it in 2018, I sold it in 2021. Depreciation policy is full year's depreciation charged in the year of acquisition, none in the year of disposal. So 2018 tick, 2019 tick, 2020 tick, which means I'm simply multiplying that figure by 3. Okay, and that gives me 13,500 euros, 13,500. Again, take that away because I no longer have the vehicle. All right. And that gives me 31,000. Let me just throw it into the calculator. 25000 plus 19800 minus 13,500, and that gives me 31,300 euros. 31,300. Okay, that goes in minus FA. Very straightforward. Okay, 31,300. Ideal. And I can move on to the next part is working, which is 1, 2, 3. Next on the list is on the profit and loss and disposal. Okay, so go into my T account, open up profit or loss on disposal. This is a nice handy one. Okay, we're well used to it by now. So how it's going to be is cost minus depreciation equals net book value. All right, so if you're wondering, the cost was, in this case, sold it for, so it cost me 30,000 euros. Okay, the depreciation, which we just calculated on the previous page, was 13,500. Okay, so take away 13,500 from that figure, and that leaves me with a figure to the value of let's check that there now. So it's for 14, so 26,500, 26,500. That's what it was worth. And then I received an allowance in respect of the old vehicle. So the allowance in this case was, if you look here, 17,000. Okay, so that's the allowance there. That's 17,000. As you can see, we're coming out with a fairly heavy loss here. No, it's not. Sorry, it's the other way around. So it was worth, I have that wrong. That should be 16,500. So 30,000 minus 13,500 is 16,500 euros. I take away 17,000, so it was worth 16,500. I received 17,000, which means I actually made a profit on this vehicle. Okay, even though it will come out as a minus, you have to look at that and go, okay, that's what it cost me, that's what it depreciated by, that's what it's worth, that's how much I received, which means it has to be a profit. Okay, in a T-account format, I'd have 30,000 on the debit, I'd have 16,500. No, I wouldn't. I'd have 17,000 on 17,000 for an allowance on the credit, and I'd have 13,500 on the credit. Whichever side is bigger refers to profit or loss. This side's bigger, which means it has to be a gain. Profit, gain, so P&LG, okay, 500 euros. And the last item on that list, which we're used to dealing with, is the net amount for the transaction was incorrectly was entered correctly in the bank account, but was incorrectly treated as a purchase to trade in stock. So the last item I need to open up is purchases. All right, very straightforward. It's not going to be the trial balance figure because I have a working on it. All right, and I should be doing this. So if I'm teaching you how to do it, I should be doing it myself. So the delivery man's cost figure changes. My patents figure has changed, so scribble it out. My what else has changed here? My purchases figure is now gone. My creditors figure is now gone. My advertising figure is now gone. Okay, so by right we should be doing this to make sure we're coming out accurately. So if I go back here to my workings, I can see here that I've got a working on purchases and working for 940,800. Okay, so scribble that out. I'm over my purchases figure. So 940,800 in a T account. 940,800. All right, that's my expense, and the net amount is what I'm looking for here. So the new vehicle cost me, just to clarify, the new vehicle cost me 42, but I received an allowance of 17. So the difference there, 42,000 minus 17,000, is going to give me 25,000 euros. So that's the net amount of the transaction in this case. That net amount of the transaction is what gets taken away, 250,000. Okay, I've seen it more than once with you. You take the old figure and you minus the allowance. It's the new figure. I bought a new vehicle, so it has to be the amount that I physically paid for the new vehicle. All right, so it's the new figure minus the allowance. It gives me 25,000. Throw it into the calculator, I get 915,800. Okay, 915,800. That's my new purchases figure. That's my new trading account figure. 915,800. Okay, again, purchases figure is done. What I'm also going to do is I'm going to take away that net book value of that figure because that has also gone. Very straightforward, and that's my 5th working done. So I'm moving on to working VI. So it has been discovered that goods had been dispatched to a customer on the 31st to the 12th. So the transaction had happened on the 31st to the 12th, which basically indicates to me that I no longer I sold stock basically. Okay, or sorry, just have a go out there. So because it was a sale or return basis. So what you have to think of here is, right, I sold goods. If I sold them, what would have been affected was sales, debtors, and closing stock. And he is now returning those goods to me. So I now have the closing stock, I no longer have the debtor, and I no longer have the sale. Okay, so just be careful in relation to that. Sales is recorded at selling price, debtors is recorded at selling price, and stock is recorded at cost price. That's just information you need to know before starting the working. So the amount at 25,000, which is markup at 25%. So working 6, I'm just going to do the calculation first. So this is sale or return. All right, so I've got sales, and I'm going to reduce the sale. I've got my debtors, because I no longer have the debtors, so I'm reducing my debtors, and I now have the stock, so I now have closing stock. And again, the reason it's closing stock is because that transaction happened on the 31st to the 12th. Okay, so the accounts I'm going to open are sales. All right, open a T account. I'm going to open up debtors, open a T account, and the last one is I'm going to open up closing stock. But before I do that, okay, I'm going to do my calculation. So coming from the question itself, it says here, goods which cost were sold at 25,000 euros. So 25,000 euros is basically what I sold them for. So that's the amount that's going to get taken away from sales, and that's the amount that's going to get taken away from debtors, because that's what I recorded that in the books in the first place. But I'm going to divide that by 125, and I'm going to multiply it by 100 to get my cost price. And my cost price in this class is just a handy 20,000 euros. So that's selling price, that's cost price, that's the amount that's going to get added to closing stock, 20,000 euros, if that makes sense. Okay, now there's a trial balance figure for sales, so I'm just going to bring that down there. And again, when I'm bringing it down, make sure I scribble it out. 138,000, 138,000. Okay, so 138,000, and I'm taking away the 25,000 euros. And the double entry is it gets taken away from debtors. Again, debtors, trial balance, 82,600, scribble it out. TB, 82,600. 82,600, and I'm taking off 25,000 euros. Okay, so to subtotal both those figures up, I'd come out with 57,600, and I come out with 135,500, 135,500. Okay, very straightforward, nothing overly difficult. Sale is going to go to the trading account, 135,500. My debtors is a current asset. Okay, 57,600, and my closing stock, and again, I've had a working on closing stock already. Back to my opening figure here, scribble out 90700 and bring it down, please. Okay, so 90700, and that's coming from working one. 90700 plus 20,000, because I now have that stock. That's why I'm adding it back on. Okay, and remember, that's my double entry, but stock goes to two places, so this final answer is going to go to two places. That's why there's no double entry for the T account, and that will give me 110,700 euros. That goes to the trading account, and it goes as a current asset. Okay, so 110,700, 110,700. Very straightforward. Have a look at the next one, and I'm gonna leave that's video clip 1. I'm gonna do 2 and 3 next. Okay, so we're down here and we're on to working 7.